We are group 4, belong to tutorial 2. Our group members include Phỉ Lan Hương, Nguyễn Thu Phương, Bùi Huyền Trang, Nguyễn Thị Uyên. Our talk today is about the credit analysis and lending management of MASAN Group. This talk is divided into 5 parts: financial statement analysis, credit risk analysis, legal documents, other conditions, and conclusion and recommendations. Our first part is financial statement analysis. Include the financial ratio, common size, and time series analysis. The first one is liquidity ratio. Include the 2 metrics, current ratio and quick ratio. About the current ratio, this ratio is smaller than 1.5. So the MASAN Group is difficulty in liquidity. The quick ratio is below 1. So MASAN does not meet the current liability out of the quick assets. So the MASAN should find the measures to improve liquidity problems. The second one is efficiency ratio. Include the inventory ratio and average collection periods. Inventory ratios increase in 2020 compared to 2019. Show the ability of the managed inventory is quite good and recovers in 2020. The average collection periods of MASAN is quite long, especially in 2019 is 69 days, and in 2020 is 41 days. They show the receivable management improved in the 2020. The third one is profitability ratio. We mentioned the gross profit sale ratio in 2020. A dramatic rise. We're seeing the MASAN Group's revenue. The cost of goods sold grew nearly double, which contributed to a small percentage of the gross profit sale. And the net profit sales ratio fell considerably to 1.81% in 2020. The reason was that the revenue of the corporations was high, but the operating expenses were very large. So we can conclude that MASAN Groups may not control the cost and use the investing capital efficiently. And the next one is leverage ratio. And the first ratio is debt equity ratio. In 2020, the ratios increased significantly. So the MASAN can have the difficulties with their paying back the debt, and the possibility of the bankruptcy may be higher when the interest rate increase. The second ratio is interest rate coverage. This figure decreased in 2020, so the corporation probably was more being burdened by its debt expenses. The last one is the fixed charges coverage ratio. This ratio decreased in 2020, so the MASAN may be lack ability to make payments on the fixed charges. And we move to the common side of balance sheets. The percentage of the short-term assets to total assets increased, but the liquidity assets decreased. Increasing in the inventory help MASAN meets the demands of the manufacturing and distributing goods process better. The rising sharply in the liability list, reducing in the owner equity, showing MASAN seems to reallocate its capital structure. They tend to use more debt finances to raise their capital, which means that they accept to take more risk and expect the higher return in the future. The company is riskier, with more debt burdens and more doubt put in their firm's ability to service the loan. And for the common side income statement, from MASAN Group, the net sale increased slightly, makes the gross profit decrease. The selling expense rise sharply in 2020, and which leads to dropping significantly of the net profit after tax. And the next part is
the time series techniques, and we also call the trend index statements. Based on the income statement, we can recognize the revenues. Net revenues show upward trend, increasing significantly to over 200 in 2020. For the expense, the cost of goods sold rose suddenly in 2020, more than double from the 2 previous years. we can recognize the escalation of operating expenses, including administrative expense and particularly selling expenses. As a result, net profit after tax plunged to only a quarter. And in short, 2020 was the year when MASAN Group faced many difficulties in doing business, especially in cost control. For the balance sheets, we can see that both total assets and total liability increased. However, the increasing magnitude of liability was much more than assets, and the retained earnings fall significantly. It is obvious that MASAN increased leverage suddenly and by a huge amount, which might make the company far more riskier in the eyes of the lenders.
Credit risk analysis includes three-part expert system, risk premium, and discriminant analysis. The first one is expert system. For the character, the main business area that MASAN Group focuses on is Vietnam consumer goods and resources. Director of MASAN is Mr. Danny, an analyst in investment banking division. He has enough competence to operate and develop MASAN Group Corporation in the long run. MASAN Group was listed on Ho Chi Minh Stock Exchange, and the company approaches the bank for a working capital at 50 billion Vietnam dong, and the amount of loan accounts for 0.054% of total asset. And MASAN chooses increasing sales as an expansion strategy. Therefore, its risk is lower. The next part is capacity. Debt ratio, the figure is greater than 40% in 2020, which means the firm did not have a good credit worthiness. The firm has a lower chance to meet the debt obligation without selling its asset. The next one is operating cash flow to total debt. The ratio decreased, which means MASAN financial health is worse. The last one is debt to income. In 2020, this percentage was 42%. Bank might be careful in lending decision. The third part is cash, including 5 ratio that we've mentioned in part 1. It is collateral. Real estate, warehouse, equipment, and inventory are security for which prices can be expected to remain stable or not while fluctuate. Inventory, MASAN Group keeps a large amount of inventory. In case of non-payment, lender can use such items to compensate for the losses. Cash secure loan. Cash is a type of collateral because it works simply. MASAN can take a loan from the bank where it maintains active account, and in the event of default, the bank can liquidate the account to recoup the borrowed money. The last one is blanket lines. This involves the use of a line, which is a legal claim allowing a lender to dispose of the asset of MASAN that is in default on a loan. The last part is condition, including internal and external. For instance, internal analysis, the proportion of loan for a large enterprise increased from 31.2% to 32.5%, lending to large corporate customer and issuing corporate bonds will be the main drivers of credit growth, while retained credit will not be as strong as before. A credit institution shall provide a loan when customer meets the condition. Clients are legal entity, the need for a loan to use for legal purposes, there is a feasible plan for using capital and have the financial ability to repay the debt. For external analysis, COVID-19 pandemic has caused many problems. The supply raw materials is broken, domestic consumption declines, and export orders are canceled. Shortage of goods and capital flow or accumulation at the warehouse. The consumer are looking for more good safety after the pandemic. They tend to use local domestic products. So that is an opportunity for the Vietnamese food industry in general and for MASAN Group in particular. And the next part.
For risk premium analysis, we have collected the rate of the Vietnamese government bond and the MASAN corporate bonds, and can calculate the spread is 7.53% for 1-year rate and 7.4% for the 2-year rate. Based on that, we can calculate the probability of repayments of year 1 is 93.14%. That means that we have 93.14% chance that the debt will be paid and only 6.86% of defaulting. The spread of 7.53%, which is higher, might not purely represent the credit risk because it also takes into account another risk, specifically liquidity risk. The second period repayment probabilities is 93.46%, and the cumulative default rate of MASAN is 12.95%. Over the periods, the debt from MASAN Corporation has 12.95% chance of being defaulted. The repayment rate is 87%, which is quite high and relatively safe for the lenders. The third part is discriminant analysis, is ASMA score, and is an important use model to determine the potential of bankruptcies. We can recognize that the Z-score on the past 3 years were higher than the cutoff point of 1.8 in 2018 and 2019. This score was higher than 3, indicating strong financial positions, low probability of bankruptcies. However, in 2020, this score drops to only 1.96, and MASAN fell into the gray zones. That means the firm has moderate probability of bankruptcy in the near future. This does not mean the firm has low financial stability. However, lenders need to be cautious and be diligent of the risk.
And now I will present about legal document. To ensure the legality when lending, the State Bank had issued decision on the issuance of the regulation on lending by credit institution to customer. Lending of credit institution and borrower must be made in credit contract, including contain information, loan condition, loan use purpose, loan amount, value of collateral. From there, the bank can easily identify the subject assigned by the MASAN when the enterprise needs to borrow capital for business investment and product, particularly as following Article 13 power and duty the board of director. For approve the following contract and transaction: borrowing, lending, and selling property with a value of 10% or less of the total value asset of the company recorded in the most recent audited consolidated financial statement between the company and shareholding, holding 51% or more of the total voting share or related person of such shareholder. And now I move to the other condition. MASAN firm must file comprehensive financial statement each month with the principal bank, and the next is the firm must keep a minimum current ratio of 1.5 under the term of its loan agreement. And the next is the term the firm must fully imprisonment insurance its production like equipment, asset, pressure as a collateral against the law due to fire, theft, or adverse weather. And the last is the firm must notify lending institution if it's a plan to take new debt. And now I go to the conclusion about strength. So positive side is the business growth. So working capital including account receivable and inventory present upward trend, signaling the recovery of the product and business activity after the economic downturn, and about which needed the firm liquidity for below standard and profitability decline. The company had difficulty in managing cost of goods sold and operating expense, selling expenses. About opportunity, however, because of size of loan is not too large compared to the total asset, plus the company reputation and growth potential, it offsets the risk of bad debt. About threat, the company sudden escalation in debt in 2020 also a warning about credit risk. And now I move to the recommendation. In general, with productive opportunity in the future. The loan application of MASAN Group should be approved. However, the firm of operation and financial position in the term of the loan should be closely watched by the lender. In addition, when extending a loan, we require strict legal document to guarantee that the lending process complying with the law and regulation of government and lending policy of our bank. Also, we propose the further restrictive convention regarding the borrower obligation and responsibility in using debt capital. Since you have lending officer to control the borrower behavior, identify any problem loan on timely basis to working out immediately. Third, preventing significant losses. And this is our presentation. Thank you for listening.